Hi everyone, hope you're all doing well. I know I'm doing well out there. Another day, another 52k, another 52k in my account. Everything's going well in the stock market, and that bear market from 2 years ago now is looking very far away, and it's doing absolutely amazing. And once again, we talk about stocks going absolutely crazy, and a lot of this was to do with the Fed. So we'll have a look at what the Fed were doing yesterday, and as well as that, I've got another stock that I own that a few of you guys were asking about in the comment section yesterday after that stock had a bit of a move, and I'll give my thoughts on that situation there with that stock. So I hope you enjoy it. Let's get started. And as always, if you do want to join the Patreon, link is in the description if you want to celebrate a new 52k in the market. And a lot of the stocks that I talked to you guys about are absolutely skyrocketing. If you want to give something back for all that free content I gave you in the bear market, as well as supporting the channel and getting 2 exclusive videos a week, join the Patreon. It's £5 a month, only £5 a month. And as well as that, you are getting access to the Discord, and that's probably why it's the highest Patreon to subscriber members on the whole YouTube stock market scene. So give that a go if you want to. And as well as that, get some free shares on Trading 212. If you want to join Trading 212, join with the link in the description, get a free share worth up to £100. That's the broker that I use. But as we look at the market, the king, up 5.6% yesterday. And in pre-market, it's having a pretty decent move as well. Absolutely fantastic. And for me, it's fantastic because there's a very rare time where you put your brand behind a business. And for me, I did that with DraftKings. You know, when it's my biggest US holding, this is where most of my wealth is tied up, and I put a lot in it. You know, I've never been that really big as exposed as I was with DraftKings into a position. And even now, it's a pretty heavy weighting in my portfolio, probably a little bit too heavy weighting, but the rewards I'm getting from this one is absolutely insane. And yeah, for any of you DraftKings shareholders, I'm sure you're absolutely smashing it. And you know, when your biggest position is up 5%, you know, you are going to end up crushing the market that day, and that's definitely what happened. It just jumped to 1.4% in pre-market, insane. And year to date, I mean, up 37% year to date. What a stock. Yeah, I've absolutely enjoyed owning DraftKings. And Hims and Hers, one of another of my top 5 biggest holdings, absolutely cracking day, up 5% as well. I think Hims and Hers is currently my 3rd largest position in the portfolio. And yeah, once again, if you've got your 3rd largest position up another 5%, you know, that's going to be another mega day. Same again, moving a lot in pre-market as well. Year to date, up 70%. Jeez, I mean, do you remember when people were, I remember people talk about DraftKings at $10 going, oh, it's going bankrupt. I remember people talk about Hims and Hers at $3 saying it was uninvestable. That was only like 2 years ago, and they've missed out on a 5-bagger. Google, not as big as move as the other ones as you probably would expect from a 1.8 trillion market cap company, but Google having another good day as well, up 1.19%, and definitely recovering a lot of that drop it had the other day. And my 4th largest position, PayPal, well, actually technically my 2nd largest position right now, PayPal up 3%. Actually nice to see PayPal having a bit of a rally up as well, starting to come off its lows, which is nice to see. And my 5th largest position, Mercado Libre, having a decent day. I'd say that this is the one that's been a little bit more sluggish this year, still pretty much break even, but if anything, I've got to say it's giving you a little bit of an opportunity to buy. You know, it's coming a little bit harder to find those opportunities when you've got so many stocks rallying up and a lot of your big holdings absolutely rallying. But Mercado Libre, even though I'm up a lot on this position, still giving you a decent opportunity to maybe get in there, is in my opinion on that. But anyway, the stock market is rallying, my account's rallying, 52k's, my account's at 52k's. What is going on here in the market? Well, a lot of it was to go with the Fed. The Fed had the meeting after the inflation data that we had that came out, and yeah, people took it really positive, what Jerome Powell say and what the Fed was saying. And I've got to say, I looked at what the Fed was saying, and I've got to say I was quite surprised to see the market reaction, because I looked at it and I was like, yeah, it's okay, but I don't think there was anything exciting there to get really excited about. I mean, GDP growth projections did go up. You look here, from 1.4 to 2.1, 2025, 1.8 up to 2.0. So clearly there's improvement in the GDP forecast, which I'm not really surprised about. There wasn't really much in the employment rate. When you look at the data was basically the same. They were expecting a little bit higher in 2025, but not much change there. On the core basis though, there was a bit of a hike up in the projection data, not much there. So I was looking here and I was thinking there wasn't really that much of a change in the numbers. The big thing is a little bit more, well, I say a little bit more, a bit more changing the GDP growth. So yeah, that was good. I looked at the Fed funds rate, and you can see here the projection was 4.6, and this year 4.6. So the Fed is still projecting the 3 cuts. I thought this might get a little bit more attention, is that the December projection for 2025 was to go to 3.6, and that moved up to 3.9. So I thought, are the people going to pick up in 2025 that the cuts are maybe a little bit less, and maybe that spooks a few people, but they weren't really bothered. I mean, a lot can change by the time we get to 2025, so that's probably the market going, yeah, we'll see what happens when we get there, because so much can change. But overall, there wasn't really that much change. There was just a bit more growth forecast, and I thought, you know what, that's probably what the market's liking. It's liking the consistency that the Fed is sticking with the rate cuts, and that's what I think the market's liking. That's what, especially when you look at a lot of the small caps, because like I showed you there, the stocks that really rallied were the small caps and the growth stocks, the likes of DraftKings, for example, the likes of Hims and Hers, for example. They were rallying a lot more, and the reason probably why is because the smaller market caps, it gives them more security on what the future lies on interest rates. Those interest rates, more sensitive businesses are probably liking it, that there's more clarity on the future. And I think that's why probably the market got excited, is that they kind of went, yep, there's still that kind of 3 rate cuts forecast, so we can plan ahead. And that's what the market does tend to like, is consistency and not surprises. And probably the consistency is probably seen as more dovish than hawkish. And that's probably why the market rallied on a lot of this news today. I'm surprised how much, or yesterday should I say, I'm surprised how much it rallied, but I can kind of see why. So yeah, and obviously when you look at like the S&P 600, you can see here what I mean by the small caps like it, because that was break even, and then the Fed talks, and the S&P was up. So I think it's just the market liking the consistency from the Fed here. I don't think there was much change in the information. I think the consistency is what was liked, and that's why we rallied. That's what happened to the market and why it rallied. Really quickly, stock that a few people mentioned about was Topgolf. Topgolf had a good day yesterday. The stock was up a lot. However, it did give some of it back. It was up about 12%. It finished the day around about 8% up. I think in the next few days, I'm not going to lie, I think Topgolf is going to give a few more of this gains back. I think it's a bit of a fake rally that's going on in this stock. The reason why is that Topgolf got an article published by an outlet here saying that their golf equipment business is up for sale. So not Topgolf as a whole, the golf business. They actually said that they're going to sell it at around 3 billion, which I was looking at thinking, like, the whole business right now is worth 2.6 billion. So if you're getting 3 billion for the golf, you're going to 100% run and take it. And that's kind of where I thought, this is probably not true, because I can't see someone paying more than the market cap just for the golf business. But I mean, if it's there, it would have been a good thing to take, because I personally, I'm in Topgolf for Topgolf. I'm not really bothered about the Callaway brand, so if they can sell it off for good money, I would be fine with it. But like I said, I don't think there's any truth here. I mean, if they did sell it, I mean, that would be amazing, because the big issue with this is the balance sheet. Because if they can pay the debt down a little bit more, that would be absolutely amazing. And they could also buy a good chunk of shares back after the acquisition. But like I said, I don't think it's going to happen here. I mean, Topgolf's been a really frustrating stock to own, really, because I think I'm around about down 20% or something on this position right now. And I've had it for a few years, and it's not really done anything. And Topgolf's one of those stocks that I say is very much disconnected from the financials, because you look at the stock here, and it did peak in 2021, and it's down 57% in the last kind of 3 years. And if you look at the share price point of view, it's actually down before the whole CV situation. You're kind of at the levels you're at in 2019. So, 5 years, and the share price hasn't really gone anywhere with Topgolf, which has been a bit frustrating as a shareholder. And like I said, though, it's not because the company hasn't financially performed. If you look at the last 5 years, you would actually look at, let's go on the past financials here. And if you look at the past financials, I mean, they were doing 1.4 billion in revenue. They're now doing 4.2 billion. So, I mean, the revenue is nearly up triple since that time frame. And if you look at the profitability, yeah, they were making about 50 million profitability, and the profit has doubled. There's a lot of costs going at the moment because of the new Topgolf locations. But even then, the profitability has doubled since that time frame. But yet, the stock is valued lower than where it was 5 years ago, even though the revenue's trebled and the profit's trebled. And it's one of those stocks that I say is a bit disconnected. It's awful when you get one of these stocks, because at some point it will show the right share price, because it should be higher. It should be higher than where it is right now, no doubt about it. But it's frustrating as a shareholder, because sometimes you get these stocks where, eventually the share price will catch up to the financials. It's just not happening at the moment, and it's one of those that's frustrating as a shareholder, because you've been in it for a while and you're like, well, the financials have improved, so why hasn't the share price improved? And it's just one of those that sometimes happens. I mean, I'll quickly show you something a bit similar. So, for example, Hollywood Bowl. Hollywood Bowl was a company that has only just recently broke to new all-time highs above where it was before the CV situation. Literally in the last kind of 2 months, it's finally broken to all-time highs in the stock, which is crazy, because it's taken nearly 4 years for this to happen, and it's only just above it, by the way, as well. So it's taken nearly 4 years to break to all-time highs. But once again, you look at Hollywood Bowl's financials, for example, which is kind of a bit of a similar business to Topgolf, really, kind of a leisure sort of business. And you look at that business as well, and they were doing 131 million in revenue, and now they're doing 215 million in revenue. You look at the profitability, it was 21 million in profitability. It's now 34 million in profitability. So the financials are way ahead of where they were, but yet it's taken 4 years for the share price to finally get to where it should be. And it's sometimes frustrating as a shareholder to sit there and see your financials do very well and then you get no reward on the share price. But eventually it will happen. You look at Hollywood Bowl, for example. It was annoying that it's taken 4 years to get there, but it will finally get there. And I look at Callaway as well, and it's been a bit frustrating, because you've seen the financials improve and yet the share price hasn't. But eventually it will get there at some point. But yeah, overall, yeah, with the story about the acquisition of the actual golfing business, I don't think that'll happen. I don't think anyone's going to pay more than the market cap of where it is right now for just the golf business, even though it should probably be valued about that alone. But overall, as well, from a share price point of view, it was good to see some improvement going on there, but that's been a frustrating one. But eventually, I think it will get the reflection in the share price that it does deserve, and it will start rallying up from that point of view. So yeah, that's why the market's rallying. That's what the Fed is saying, and just a little bit on Topgolf there, because it did have a big move yesterday, and a report that they're going to get the golf business bought out from them, which I don't think will happen, just so you know. So I expect some of that pop up on the share price that's happened to give some of it back in the coming few days. So that would be my expectation on it anyway. I hope you enjoyed the video, guys. I'll catch you all in a bit.